Today I would like to explain 2016 question paper connected with limited liability partnership. In this question paper, question number 9 is connected with limited liability partnership. The following is the trial balance for the year ending 31st March 2012 of Ainapur Brothers. Okay. Capital Mavi 15,000, Bahubali 15,000. This goes to balance sheet statement under the head Partners Fund. Next drawing, Mavi 5,000, Bahubali 2,500. This also goes to balance sheet statement and comes under the Partners Fund. You deduct it in Partners Fund. Purchase and sales. Purchase and sales goes to income and expenditure statement. Purchase comes under the purchase head and sales comes under the turnover head. Opening stock 25,000. This opening stock and closing stock you compare. Closing stock is 30,000. Opening stock is 25,000. 30,000 minus 25,000. 5,000 increase in stock comes under income statement, increase in stock. Okay. Wages 5,000, salary 5,000 comes under income and expenditure account under the head personnel expenses. Plant 15,000, furniture 10,000 goes to balance sheet. Goes to balance sheet under the head fixed assets. Printing and stationery 2,500 goes to income and expenditure statement under the head administrative expenses. Okay. Thereafter, debtors and creditors. Debtors and creditors goes to balance sheet statement. Debtors comes under asset side. Creditors comes under liability side. You take as per the given direction. Cash 10,000. This cash goes to asset side. Cash and cash equivalent head. Come to the adjustment. Following adjustments are to be taken into account. First adjustment is plant and furniture are to be depreciated 10% each. So 10% of plant is 15,000 is plant. 10% on this is 1,500. And furniture 10,000. 10% of 10,000 is 1,000. Okay, plant depreciation 1,500, furniture depreciation 1,000 comes under the income and expenditure statement under the head depreciation. And the same amount you deduct in the balance sheet asset side in the respective asset. Okay. Then RDD at 5% on debtors. RDD 5% you calculate on debtors. Debtors is 25,000. 10% of this. 5% of 25,000 is 1,250. 1,250 you take in income and expenditure account under the head other expenses. And you deduct the RDD in the balance sheet under the head debtors. Then salary outstanding 5,000. Salary outstanding 5,000. You add in the salary under the head personnel expense in your income and expenditure statement. Then interest on capital is to be allowed at 5% per annum. Interest on capital 5%, we calculate on the capital. Mahavir capital 15,000, 5% of that is 750. Bahubali capital is 10,000. On 10,000, 5% means 500. So 500 plus 750, total 1,350 comes in income and expenditure account under the head interest. And the same interest you add in the partner's funds in the balance sheet. Then profit and losses are to be shared equally. Whatever profit balance remains in the income and expenditure account at the end, you distribute equally in between Mahavir and Bahubali. Closing stock comes under the balance sheet asset side under the head inventory. Then provide 30% tax on profit. Whatever profit before tax comes, on that profit you calculate 30% tax, and the same amount you take in the liability side under the head provision for income tax. Like that you have to complete the statement. Now you see the solution. Income and expenditure statement for the year ending. You write the date of the year end date. Then draw the statement. One particular column, three amount column. Okay, one particular three amount column. Here I have taken only two amount column, but you draw three amount column. That will look nice. Okay. First item in the income and expenditure statement is income. Under the income, first item is turnover. Turnover means sale. You write the amount of sale. Sale is 1 lakh. Then in this sale you have to adjust. Adjustments are not given the problem. Mainly you have to deduct the excise duty and sales return. Okay. Then second item is other income. Other incomes are also not given the problem. Next is increase in stock. So increase in stock you write in the inner column. Closing stock you write in the inner column. Less opening stock. Closing stock 30,000 is there in the problem. And opening stock is 25,000. 30,000 minus 25,000 is 5,000. Then next is you take the total of the three. Total of the three is called as gross income. Gross income. Next head is expenses. Under the expense head, first is purchase. You take purchase from the given problem. The purchases are related to material and finished stock. Thereafter, you write personnel expense. In the personnel expense, there are only two. One is wages, another is salary. So, for salary, there is adjustment, outstanding salary, you adjust and take the amount. First salary is 5,000, add outstanding 5,000. Now total is 10,000 salary. Thereafter you write wages. Wages is 5,000. So total now 15,000. 15,000 is called as personnel expense. Personnel expense. Next item is administrative expense. Under the administrative expense, you take the printing and stationery. Printing and stationery is only one item in the problem. So printing and stationery is 2,500. Thereafter, you write the selling expense. Selling expense means advertisement, publicity, delivery van expenses. Okay, like that, items are not in the problem. So it is cash. Then depreciation. So in the depreciation, you calculate depreciation on plant and furniture. Plant and furniture depreciated at 10%. Therefore, first is plant 10%. 10% on 15,000, 1,500 plant. Then furniture is also 10%. On 10,000, 10% is 1,000. So total depreciation is 2,500. Total depreciation 2,500. Next item is interest. So in the interest paid to lenders, interest paid to banks, that type of items are not given the problem. Only one item is there, that is connected with partners' capital. So you calculate interest on partners' capital. So first partner is Mavi. Mavi capital is 15,000. 15,000 into 5%. That is 750. Then Bahubali's capital is 10,000. On 10,000, 5% means 500. So total interest on capital is 1,250. Okay. And you go to next item. Next item is other expenses. In the other expense, first you write RDD. RDD is 5% on debtors. Debtors is 25,000. 25,000 to 5% is 1,250. So you take the total of inner column. Inner column total is 72,500. You deduct 72,500 in the outer column. Balance available is 32,500. That 32,000. This 32,500 is called tax, profit before tax. Profit before tax. Then in the problem there is a provision for tax at 30%. So 30% you calculate on 32,500. That is 9,750. You deduct 9,750. Profit after tax is 22,750. 22,750. Then whatever profit remains, that profit you distribute among the partners. Partners share profits and losses equally. Therefore, Mavir's share is half, Bahubali's share is half. So 22,750 into half, 22,750 into half. That is 11,375 each. The same amount you deduct in the outer column and balance transferred to reserve or P&L account to the balance sheet is 0. So this zero balance goes to balance sheet. Okay. Now you see the balance sheet format. Now you see the statement of account connected with balance sheet. Statement of assets and liabilities. So in the statement of assets and liabilities, also you draw these three columns, three amount columns, not only two amount columns. For your adjustment, you draw three amount column, one particular column. Okay. First is contribution and liability. Under contribution liability, first item is partners fund. In the partners fund, contribution of partner first means Mahavir. Mahavir's capital you take. Mahavir's capital is 15,000. For this, you add interest and share of profit. Share of profit is 11,375. Interest on capital is 750. You take the total. Out of this total, you deduct the drawing. So drawing is 5,000. Balance of capital connected with Mahavir is 22,125. Next, you take the capital of Bahubali. Opening capital 10,000. Add interest on capital and share of profit. Share of profit is 11,375. Then interest on capital is 500. Total is 21,875. In this total, you deduct the drawing. 2,500 drawing. 2,500 drawing will deduct. Balance is 19,375. So the total of the first partner and second partner goes to outer column. So total contribution is 41,500. This is the contribution. Then second item, reserve and surplus. Under the reserve and surplus, profit is not given. Then reserve is also not given, so its balance is 0. Then second head is liability. Under the liability, first is secured loan, and second is unsecured loan. Third is short-term loan, and fourth is creditor. D creditor. So creditor in the problem is 30,000. And here if you take bills payable is not given the problem. So this goes to outer column. Then other liabilities. In the other liability, you have to write all the outstanding expenses. So outstanding salary is 5,000. Okay. Then provision for tax. Then provision. Under the provision, you have to write the provision for tax, all the other provisions. Okay. All provisions you have to write. First provision for tax. Provision for tax is 9,750. Okay, this is the last item. You take the total. Total is 86,250. This is the liability side total. Liability side total is 86,250. Hereafter you go to asset. In the asset, first is fixed asset. In the fixed asset, only two are there. First is plant. Plant value is 15,000 less depreciation. Depreciation 1,500 you deduct. Balance is 13,500. Then furniture, opening balance is 10,000 less depreciation 1,000 as already calculated. 9,000 is the balance. So total of the two is 22,500. That is called as fixed asset. Fixed asset. Next you take investment. Investment is nil. Loan and advance is also nil. Inventory. Under the inventory you take the closing stock. So closing stock value is 30,000. Next is debtors. Debtors amount you take in the inner column. Less RDD. Already calculated. Less RDD. RDD amount is 1,250. Deduct 1,250, balance is 23,750. That goes to outer column. Next is cash and cash equivalent. Cash and cash equivalent balance is 10,000. So 10,000 is the cash in hand. Cash in hand. The last item you write other assets. If there are any other assets in the problem, you write them and take the total. So total is 86,250. 86,250 is the total. Like this, you have to ascertain the profit and assets and liabilities. Okay.